I just thought I'd take a look at the Dow. We can see we've had this bit of an uptrending channel since the 2008, and we're just broken out of it at the moment. And what I've got there is just a couple of support levels taken from the highest volume bars that have provided some support in the past. And at the moment it's currently finding support between this, on top of this last accumulation range that it had in this area here. So it's actually supporting in between the two tops of these high volume bars here. So we might just zoom in there. This is the weekly chart, by the way. So we see here we've had this big shakeout bar come down and closing off the high. And that was signal the start of accumulation. News was bad. Actually, I don't think news was that bad then. That was the Mate flash crash, which no one has been able to adequately explain. Some rogue trader who sold billions of shares on the futures exchange or something like that. I can't remember exactly, but anyway, it shook out the market. And I think at that point there was actually some shares, that actually traded at zero for like seconds. So there's something dodgy definitely going on there, but it was a shakeout. That's what it was. And it shook out the market, and then that started an accumulation phase, and that built the cause for this next leg up. And you can see smart money buy on down bars, so you get high volume coming on your down bars as they push lower. But it can't be all selling because things close off the low, and then we end up going up. So that was an accumulation phase there, built a cause for this move up, and that's where we're supporting at the moment on there. If we just zoom a little bit closer, okay, again we've had what have I done now? Switch to the daily. No, here we go. So we've broken down out of our trend channel. We had the big shakeout bar here, high volume, but it closes off the low. So we know when we see high volume that professional money, and that's what volume is, most of that's the professional activity on the market. So there's some buying there, it must have been some buying there in the bottom. It closes really, you get really high volume and it closes lower, but now look where we closed, right on the high of the bar. So there's a lot of buying, must have been buying in there. I mean, if they were selling, it was all selling, and surely it couldn't close on the high. The next bar closes low, dipping in, closes low, dipping back down within the body of this bar. But this time the volume is less, a lot less. So even though there's buying here, there's also a lot of selling, a lot of supply. And if they are bullish, they won't like leaving any areas of supply behind, especially, well, if they're accumulating, then they just want to buy lower anyway. But anyway, as you can see, it's pushed down, but it's pushed down on lower volume. So the selling is pushed down on less selling pressure. And then the next bar closes high. So again, there must have been buying, hidden buying within this down bar. Next bar up thrust on sort of no demand as it tries to push through the body of this big down bar and gets rejected. So that tells us they're not interested in higher prices, and that's because they want to buy at lower prices, obviously, don't we all? And it's pushed down again into this same area of supply, and see they're absorbing, they're actually mopping up the supply in this area, and this has got less selling pressure again. and the next bar closes high on increased volume. So that's actually quite good looking actually on the weekly, and they'll probably test down again, because even that's low volume. It's not low like this, you know, like these are low volume. So while supply is present, they won't want to mark it up. And the reason for that is because they don't want to be swamped. They don't want the markup to be swamped by sellers by selling. If they want to sell up here or wherever it is they want to sell, they don't want to be swamped by selling before they get there. It becomes too expensive. So that's why they'll shake the market out and try and, you know, then anyone who's going to sell will sell. Get anyone who's going to sell before they mark it up. Once there's really low volume, then it's safe for them to mark that up. That's if they're accumulating. But anyway, so that actually looks like actually looks quite strong. Apart from the fact that you've broken it, of course we're in a downtrend, so, and this could go lower. So while it's in a range like that, it's hard, but that's certainly until it breaks below that shakeout bar. You won't want to be shorting too close to the bottom of that bar, because that's just that's holding up there until it breaks that bar, and then we get some up thrust back into the bar. We can't really short there for the longer term. But anyway, it's gone up, it's gone down on less supply again, and that low supply is confirmed by the next bar up. So that's actually quite okay at the moment, as far as whether that thinking that maybe they could be possibly accumulating in that area. But until it clears this bar and retests on light volume, there's no long-term, safe long entry there. I'll give you an example of what I'm talking about. You see this last lot of accumulation that happened here, and they shook out the market one more time, and we got this high volume kicked in at the top here somewhere as they pushed through, and then they brought it back and tested, and then shot it back up. So that's what we're looking for a safer long entry. So it came down on really light volume. It wasn't confirmed because the next bar hammered down. There's a very narrow spread, and that's quite bullish actually. A down bar and narrow spread. The next bar closes higher. So you possibly could have taken your entry as it moved through that last peak, or even above the no demand, and then you're safe on your way. So that's what we're looking at over here. They did sort of do it here as well. You got a little test there as it broke through, tested, and confirmation, and away she went. So that's the sort of thing we're looking for, to tell us that they're leaving that area of supply behind. They'll break out and they'll retest it, make sure there's no supply left, and they're not going to be swamped by sellers when they mark it up. Anyway, we might look at the daily. Again, I've taken just some high volume bars on the daily chart. Oh, that's too far out. And there's that accumulation range there that we're now sitting on top of. Accumulate, mark it up. Distribution up the top here. I've got some really high volume bars at the top there. Very narrow spread. Breaks down, and then as it tries to penetrate back through there, it can't. And it's trying to penetrate on lighter volume than actual high volume distribution bar. And it's never going to get through. It was never going to get through there like that. Okay, away we go. So it's dropped down again. We had the big shakeout. There's a really high volume shakeout bar on the 8th of August. I've just marked the high and the low of that bar, and where you can see that we're pretty much within the range of that bar at the moment. And that's we did draw this little bear flag type formation here that it's broken down out of, but it's jumped back in. But I think that just means that it's moving sideways. So high volume down, but the next bar closes higher on high volume. So we know the professionals are very active. But if they were all selling, there must have been hidden buying in this bar, because how could the next bar close higher? Surely the next bar should close lower if they were all selling. So they're actually buying this market down here, and contributing to that volume would be margin calls, there'll be short covering, there'll be all that sort of thing. But certainly buying, because it's shifted this market up. As it's got to the top of that bar, we get no demand. So they're not interested in taking it above here. That's because they want lower prices. They want to accumulate at lower prices. We get another big shakeout down here. High volume. The volume then picks up again as it tries to push lower into the bottom of our shakeout bar. Next bar continues to try and push, but it's on less volume as the sellers dry up, and boom, up she goes. So these 4 bars here tell us again they're buying the bottom of this market here. And what we've got now at this low is less supply. Even though there's buying here, there's a lot of selling as well, a lot of supply, and they always test for that supply if they're bullish. So they've come back into that range. Volume's picked up, but there's less supply now, less selling pressure than there was in the original down. So that's quite good. It's gone up again. They've tested again. Bang again. Less volume, less supply than before. Up she goes, but we get no demand. The spread's narrow. They're not interested in higher prices. We get a real, and it collapses again. Missing one volume bar for some reason, but anyway, it comes down again, testing in this area. Up, down, again testing, and see the volume now is a lot lower than it was at the previous area as they test the bottom of this bar. So there's less selling pressure. Next bar closes up on narrow spread, so that's no demand, but it's not confirmed because the next bar closes higher. Then we get no demand again as we come to the top of the range, so it looks like they're not interested in higher prices again. This last bar is very weak. Well, the no demand is weak. But this is particularly weak because suddenly you get all this high volume, and it's like similar to what we've had at the bottom of the range. And it's very narrow spread. Now it's triple witching, so you can say, oh yeah, we should ignore that, but I think if you take the view that all trading is trading, which Tom Williams does, and you can't really ignore that. And you'll see things happen. There's a lot of things that happen off market that contribute to volume, and people say you should ignore that, but it's amazing how these things just end up working out as if all trading is trading. So I think what I see there is that that's being capped. All the buy orders are being satisfied with sell orders, and it looks like they're offloading there. Now you are pushing through. There's an area of resistance here, so that can possibly make that happen, because it could be trying to absorb the supply here, but that volume is still excessive to achieve that. You've had a lot of effort, a lot of little result, and I think that's because they're capping it at the top there. They want to bring this back down to test, and because that's so high there, you could possibly see them push lower again. They could be setting up to push lower again, so we really want to see if we see any no demand like this one after here, or any up thrusting like that, up thrusting coming up into this area, then you know be careful, because you know, they all sold there, and then there's just residual demand left over before they short it down. And they could possibly even stop up to there, I suppose, if they wanted to. But any no demand like that, any no demand bars rising into this area now, and you're really into danger territory, you know, they weren't pushing, they were capping, and there's just residual demand taking it up a little bit further before they smash it. And so that's what I suspect will happen. But you never know, maybe they're pushing through supply here. If that happens, then it goes up, and then we look for the test on light volume. But I doubt it, because it's too excessive, I think. I think that's really excessive, that volume there, and I think that will, they're going to bring this back down at least to the bottom of the range to for further testing, and possibly, because it's different now, that's different to what we're seeing over here, is no demand. This is active. This is a lot of supply suddenly hitting, so it could possibly be that they want to attempt to push further into our zone here, where they're accumulating before. I don't know, but we'll just see what happens. But that's a weak bait. Those two bars together are weak. If we get another no demand after that, then that'll be very weak, and you won't want to be long. I wouldn't short that bar, but you'd certainly be out of your longs and just see what happens. But anyway, that's the this is the XJO, and I'll go to the weekly first, and I'll just put some fibs from this high to that, from this low to that high. I think we're bouncing at the moment between the 38 and the 50 retracement. Bounced up to 61, and now we're in the sort of pattern between the 38 and the 50 fib from the, when's that? That's the March 2008 low. And then I've just marked, what have I marked there? I'll just take those fibs off, mark that high volume bar there, which has formed a band of support, which we breached with the energetic bar, went straight through there. Then okay, but then we've had it, so it's gone through on increased volume, so the professional money are active, and it's pushed down further on increased volume, but it's closed on the high, so there must be buying in that bar, and they must have started buying in the bottom of this bar for it to close higher like that. So, I mean, surely if it was all selling, it would close towards the low, and then the next bar would close lower, but it was buying, definitely buying in this area, and it's caused it to spring up. Now, the next bar, there's no demand. It's tried to up thrust, or no demand, as it's tried to go through this initial down bar, and it's rejected. So they're not really interested in higher prices, because they want to accumulate at lower prices. And we get another test. Well, it's not really a test, it's more a no demand, but oh no, there's low supply. So we've got no demand going up, but also low supply that comes down, so less selling pressure. Springs up, again we get the no demand up thrust, catching the short stops and trapping new buyers into bad positions. It's come down and tested again. That's actually a good test, because it's now less volume. It's closed towards the high, and there's now less supply in this bar. Even though there's buying in there, there's also a lot of selling. And so the test of that test has actually failed, because the next bar is closed lower. It's closed lower on higher volume, but it's closed on the high. So there's been an attempt here to push further into this shakeout bar, and the volume is still less than what was in this shakeout bar, but there's been an attempt there. But we've had demand to overcome supply. So we've had supply, as they've attempted to push further down, but demand has overcome supply in this instance, because we closed high, so there's more buyers than sellers in this bar, but the sellers are still there, so we need to see that. What we're hoping to see is all this selling pressure reduce more and more, but we've suddenly got some more supply turn up, but it's been absorbed. At the moment that supply has been absorbed, so that's quite good, I think, except that we're trying to press into this bar now, so we don't really know until that's been tested to see if all those sellers have been absorbed or if they're waiting for a round two. If we go to the daily chart, we've got this downtrend. It's been in a downtrend from April, and everything was fantastic. And we see the spreads narrowing as it goes up. We see no demand kicking in at the top here. No demand, very narrow spreads as it tries to go up. No demand. The last 2 days was no demand, then goes up a bit more and very narrow spread, and then the gotcha bar takes it out, and then you could short any rejection of that gotcha bar there. So anyway, I've drawn, anyway, here's I've got a resistance line there from this, taken from this really high volume down here. You can see where it's, where they shifted the market up. And here we go, here's a big shakeout bar. I'll zoom in on those. Okay, so really high volume down, but spread fairly narrow. High volume again, spread narrows again, so it started buying as it's gone down in phases. It's panic selling. The smart money have actually started buying. Well, you'll have short covering in there as well. But then really high volume as it presses down and then closes high, so that's and then you've had price spring away, so there must be buying in that bar for it to do that. Only buying can do that. Really high volume. Professionals are very active, and so can't have all been selling, must have been buying as well for it to close on the high. Otherwise it would have closed low and the next bar closed lower again. But definitely still a lot of supply. Even though there's buying in there, there's still a lot of supply, a lot of selling, and we want to see that supply taken out for higher prices. So I've got the resistance line on the top of this bar here. You can probably put one at the top of that bar as well, where we had high volume. As it's fallen, it's acted as a bit of resistance there as well. And then support at the bottom of the bar and the top of this bar. So, but anyway, the 2 highest volume bars, I've marked the high and the low, and the high and the low of the bottom bar. And that band there between the 2 has acted as support. So we sprung away, but you see the volume gets really light as it tries to penetrate through, and then we up thrust, tries to push through, and then there's no interest in higher prices, and then they slam it down. There's that attempt to push through into the body of this bar, and I think they really want to get it into the body of this bar, but that's been rejected. We've got less supply now than we had previously. The volume is less, so less supply. As it's pushed up again, we get the up thrust. We get a no demand first as it tries to push up into this level, and then it up thrusts. That no demand isn't confirmed, but because it tries to push up, and then we up thrust, and then they take it out. Comes down back into this area. The spread narrows on a down bar. Smart money buying down bars, but in this case they're absorbing that supply because we can see the spread narrowing. It's a narrow spread. If there's a lot of selling there, it would have been a wider spread, and the next bar springs up. But again, narrowing spread, no demand. That was a classic no demand. That was a very shortable no demand, actually, right on top of a really nice one. And that they're anticipating the red day on the Dow, which did happen, and then they slam it down. This looks like it's gone down on increased volume, close on the spun, so that was quite bad. Next bar closes up, but narrow spread up on higher volume, so there's selling pressure now. pushing down into this bar. That's where your pressure is. So it's tried to go up on increased volume, but very narrow spread. So all the buy orders have been satisfied by sell orders. And they push down again on increased volume again. So this has been an attempt to push down. Then it's gone up. Again, volume is really high, but the spread is quite narrow, and they push, and then it pushes through. The last bar is actually technically a no demand, but still fairly high volume. So this looks like an attempt here to push down into this bar. So supply hitting the market was a lot of bad news, but it wasn't really that bad news. It was negative news, but still. But that supply at this stage has been absorbed. So they've absorbed that supply, and there's a lot of buying amongst that selling that's shifted the market up again. And we've got still got less volume here than we do up here. But that was definitely an attempt to push lower into this bar. I don't think the news was bad enough for them to do that. Now we don't know if those sellers have gone yet until we test this area on no supply. So we might see that, because this has gone up on lighter volume. It's not that bad. It's actually not that light, but technically it's the lightest in three bars. So there may be an attempt now to test this area, and I think they will. They'll have seen that day we've had that narrow spread, high volume day we've seen on the Dow on Friday. They'll have seen that, and they won't like that, I don't think. So I would think that we could possibly have a red day. I think they could take it higher, stop hunt, possibly up above here, who knows, and then bring it back down. I think we could end up with a red day, and that's because they'll have seen. I mean, our market does follow the Dow, but it follows it different. I think they try and guess what's going to happen and position themselves accordingly. Or they're trading both and trading one against the other, who knows. But what they'll do now is they'll see the Dow, they'll see the high volume on the Dow, and they won't like it. The market doesn't like high volume on up bars because they contain selling. Yeah, they got buying in them, but they're not worried about the buyers, they're worried about the sellers. And so that could possibly have a negative effect on our market on Monday. And certainly we've seen a little bit of increased supply come in as they've tried to push lower. You can see this little median line I had drawn in connecting these two tops is actually, that's a downtrending median line. That's actually been working. And I think if we put a little line there between those two, well, it has penetrated through there, but I think if you parallel these two, I think you can, I can't do it here, but I think those tops there are running parallel to this median line. So it is a logical place to pivot, and we are in the middle of our trading range. So that's a logical place to pivot as well. But there's been this is the only thing that worries me, is that there has been an effort here to push lower down, and we don't know if, I mean, that push was pushed down, was rejected, so there's buying coming in there, but we don't know that those sellers have gone yet. We don't know if that's been absorbed until we see a really light volume coming back down into there to tell us that that's been absorbed. So this could push down. They may try and push down again on Monday. We'll just have to see. But if we see some really light volume down bars into here, then that'll be okay too, I suppose. But I don't think they're going to like the day we had on the Dow. I don't think they're going to like that at all. But anyway, we've got our buying, so that's our background strength there. We do have some background strength. We are in a downtrend still. No two ways about that, and you can't. But you've got to be careful trying to short within the body of this bar. I think there are short trades, I mean, they're good intraday day trades, no doubt about that. And you possibly could get one on Monday if they up thrust before taking it lower, and that could possibly happen. I'll use the green day on the Dow to up thrust, but I don't think they'll like it. I think they'll use the green day to up thrust and then sell it back down, and we'll get an up thrust day on Monday. It might close high, it might close below, but I think that's, we might get one of these, quite possibly. If we get one of those, they're actually good to good for a day trade to short, actually. But yeah, that's all we can say. There's our background strength. There's definitely buying in the background there, and we'll just have to see what happens. I think on your banks and your BHPs, I'll just put up CBA quickly. That's a no demand. See that volume on the last bar there? That's a classic no demand. Narrow spread. I mean, it's hard to say because you've had these, there's your effort to push lower into this bar, and it's a lot of selling pressure there, but it's closed higher, so there must have been buying there. But we're now closing lower into this bar again, so that's the concern, that supply has suddenly turned up. We want to see less supply testing in here. Suddenly supply has turned up, and even though it's been absorbed in this case, the next bar is up on no demand. Now it can't be, that can't happen when you see climactic bars, like they're pretty climactic, high volume down and up like that. You can suck the volume out of the market. You get those, you can get a no demand immediately after, but that's a very nice no demand bar there that you would think, well, it looks very shortable actually, except you're in the middle of a trading range, so it's probably not the best place to be shorting. You are just above, yeah, it's hard to, that's a hard one, because the XJO didn't look too bad as far as its no demand bar, but that looks pretty narrow spread. That looks pretty bad as a no demand, and that could possibly be because they are expecting a bit of red on the Dow. I don't think the Dow put in a no demand bar before tonight, and I think they had a look at that and were possibly expecting a red day maybe. But what we got last night, I think they won't like that at all. So we'll just have to see what Monday brings. Anyway, that's my waffling done.